Today is Wednesday, August 14th, 2019. This is TraderSwift, and I'm going to give a quick market update. All right, we had a lot of volatility today. Looking at the QQQs, we had this big down day today, this big red nasty candle down on higher than average volume and accelerated volume, so that's not a good sign. For those of you in the swing chat channel this morning, I posted this chart with these lines showing the total range that we have to trade here, with some of the key swing points that I've identified, and then I've marked these areas as a bullish range, consolidation range, and a bearish range. So yesterday I was quite happy that we did close above this candle, just still slightly above, but we did close above on higher volume. That was a bullish sign, but unfortunately we did not have a continuation today. So that move yesterday is completely invalidated. I am still in all of my trades, which I'll talk about in a bit, but as you might imagine, I'm underwater in those. So anyway. So we did close in this bearish range, and the reason why I set that bearish range is because that is the top of the original down day. The big down day that we had the week before last. So we're in that range. So now that we're in here, we've closed in here, especially on heavier volume, it is quite conceivable that we will come back and retest this area right here. So this is very possible, so I would say be prepared for that. If you do have trades, make sure you're protecting yourself. Make sure you know where your stops are, and that you do get out when it's time to get out. Because we definitely could have more downward action. Now, if we make it down here, it'll likely find some support here. But if it breaks this level, the next major key area of support is all the way down here. Looking back, that was at the bottom of June from the last correction. So I'm hoping we don't get there, but I just want you to be aware what could happen. So anytime, if we close in this range down here, we could definitely easily find ourselves down here again. Now, scaling back a little bit, you see last year we did come back, and then in the beginning of January we had this nice up run. We corrected, came up again, tested the highs. We've came down again, and then potentially we could come back up. If we are in a longer bullish market here, this pattern on the long term is still very healthy. But I know most of you are short-term traders, so it is important to keep that in mind and be a little cautious right now. Looking at the SPYs, we have a similar situation. This candle actually looks nastier because it did close at almost the very bottom of the range, also on high volume. Last week I was talking about retracements, and if you do look at this downdraft right here to here, using Fibonacci retracements, yesterday we actually did almost touch the 0.618, which is still a common retracement. So that also tells the story that this bounce, we came down hard, we bounced on lighter volume, and now we're revisiting this swing point on heavy volume. So that also builds the case that we're gonna find ourselves back down here. We'll have to see what happens when we do approach this level. Do we bounce fast, or do we come down on heavy volume? And if that's the case, I am going to be expecting it to break through. But if we come down on lighter volume, it may consolidate for a while, and we'll have to see which way it does break. But based on Fibonacci retracements, we did have a retracement. So it is likely that this could be our new B point, and we could find ourselves down here. So I've been saying the word cautious a lot over the last 2 weeks, and that definitely continues. Another thing to keep in mind is when we are finding that that B to C point, um, and then C to D point during this retracement area. It never goes in a straight line. We could actually find ourselves back up here again tomorrow, and then back down here on Friday, all within this consolidation range. So all of that would be fine, healthy, normal price action. So just be aware of what could happen and the different scenarios there. If I'm looking strictly at where the price closed and volume, to me that says more downside. I'm going to be protecting myself. Looking at the IWM, which is the Russell 2000 small caps, we actually did close at the bottom of that, or near that bottom swing point from last June. And the Russell generally has been weaker. Now the QQQs and the SPYs has relatively been stronger than this, but the Russell smaller companies, and typically it leads markets, but lately it has been lagging. So maybe that's a indication of a little bit weaker economy, or at least weaker growth on or within smaller companies. So it's just something I watch. I don't really trade too many Russell stocks, but just something to consider. Gold also did not have a good day. It closed below this swing point that I pointed out yesterday. Is 87.06. This is JNUG specifically, but gold trades the same way. This is the ETF for that, but the 3x ETF for that bullish ETF. But yeah, unless things continue to get worse, I'm probably not gonna be trading this, but I do watch it. Now into the stocks that I'm holding. Team. So I thought Team held up pretty well. I did get in right around this swing point, so I am down. And I'm just gonna, it was on lighter volume. It is still up here. I mean, this is these momentum stocks do have a wide range that they do trade within a week. So it's important to have a wide stop, and that's why I have a wide stop. But I'm going to hold. Now I'm going to be watching to see what happens tomorrow, and especially to see if we can hold this level. If we break this level, this 179.09 level, I'm likely going to be selling everything and then waiting to pick it up back down here. But for now, Team is holding. When trying to determine what stop I want to place, a lot of times I will look at the weekly chart, and I want to set my stop below the low of the previous week. Now that's a pretty wide stop for this one. I'm not sure I want to take on that much pain, but that's something to be considered. Another thing to reiterate is all of these positions I'm in are very small positions. I only take a portion, or an initially small position, usually a fourth to a third of a position when entering, because this could happen, and then when we do break out to new highs, then later I'll add to it, and that helps with my overall risk management. So even though I am down a couple percent, it's not that big a deal, because it's not my full position, and I'm able to take that heat, and I knew that getting into it. I knew this is a market we should be cautious in. Even though we had a good day yesterday, there's still a lot of red flags out there, so it's important to stay cautious. CrowdStrike, I thought CrowdStrike held up very well. CrowdStrike has had this little run up over the past week. It has consolidated here, but it's near the top of that range. So if this is temporary in the markets, I expect CrowdStrike to do well and continue its run all the way up to 116, my price target. If not, if we do break down a little bit more, I'll be looking to pick it up later, probably around this area, or ideally this 80 area. AYX also held up very well. We did have a down day slightly, but it is on lighter volume, um, and it's still within the highs. So not concerned with the stock at all. Thought upheld. I thought it held up very well considering how far it's been running, and this is exactly why I trade the leaders. I want to trade stocks that when the market is doing well, they run the farthest, the fastest, and when when the overall market is doing poorly, they're the ones that don't get hit that much. So that's something to be said. Now, CrowdStrike, you do see it had a negative 5.65%, and that's just simply due to the volatility of the stock. I mean, it's a wide range stock as it is. And if I use the measurement tool, if I look within the last week, it's moved about almost 15%. So, if you expect a stock to have high upside, it is going to have some wide downside as well. So that's to be expected. But this candle really isn't any wider. It's actually more narrow than yesterday, and about average. So there's nothing to be concerned about there. Coupa didn't hold up as well as Crowd or AYX, but it did close above last week's low, which is sort of my key area to watch. Let me go ahead and draw something there. That'll likely be my stop. I'll just have to wait and see how it goes. But I probably will sell below that. Now we did test it today, but we recovered nicely, and that's actually a much better shaped candle than what you're seeing on the SPY. So relatively not bad. Same thing with Okta, same shaped candle, also had the same test. It did slightly touch below it, but it held it, and I'm fine with that. Now, if it starts closing below this line, I'm going to be, for the day, I'm going to be concerned and likely get rid of it, probably at the end of the day. If we open down tomorrow, majorly down, and the volume is there, I also may get rid of it. So I just my stops, I don't always set hard and fast stops. Sometimes if I'm going to be out, if I'm going to be traveling, I will. If I'm going to be in front of my computer, I'll watch it and evaluate it there. But again, I'm trading small positions, so I'm not going to wipe out my portfolio just because one trade goes bad. So that's just something to keep in mind. Okay, so those are my positions. Looking at a few others, Zscaler held up well, actually held up very well. This actually would have been a great place to pick it up if you were into that. But, today was kind of a scary day, so I can understand why you probably didn't. And I was busy all day, so I didn't. Shopify, considering how much it's ran, held up okay. If we do get a little bit more downside over the next couple days, it may be good to pick it up in the 337 area. So that's something to consider. Smartsheet, it hasn't found its footing yet. I'm not quite sure. Looks like it closed on the close of that up day, which is kind of interesting. Odd place to find support, but there you go. I'm not interested in Shopify until it's above the 49.41 level. ARWR, now this is a new one that I added to my watch list yesterday or last night. Wow, it's been holding up very well. Today was a green day. It was up 0.5%. That's really good. Really nice ABCD pattern setting up here. There. Well, you could go all the way up here, even though it kind of stopped. Now it's consolidating, and then once it does break this area right here, to new highs, that could be a good buy. I'm interested in this simply because it has been holding up so well. Let me look at it on the weekly chart real fast. 1 second. Here we go. Okay, well, the only thing I'm seeing on the weekly side, it is extended, but it looks like it has been building a new base, although it is not a nice flat flag base. It's kind of been an ascending base. Now that ascending base is a little more bullish, but I don't know. To me, a little more scary. But we do have this larger one, there to A to B, B to C, C to D, and then that was completed. But within here we have smaller ones. So A, B, C, D, and then A, B somewhere in there. C, and then once it takes out a new high, that's why I don't like these. They're not as clean, but whatever. If I expand the scale a bit, it doesn't look as bad. But I would just wait till it takes out a new high. Let's see if I look for any high volume days. Yeah, I mean that's the highest volume day right after earnings, so that's likely the key level. Although they're all pretty close, so in this range is, if you take that one there, the first high. So buying within this range is in my opinion a good buy. So something to definitely keep on your watch list, especially with it showing the relative strength that it showed today. AMD broke down even more, surprised me a bit, and it did break down on accelerating volume. It did find support at this previous support level, but we'll see what happens. If the broader markets break down more, we're probably going to at least continue down here to test this level. So there you go. Chegg continued down. Volume doesn't seem special. BYND, you could look at this as a down now and then a consolidation, which could be setting us up for another down all the way down to here. So A, B, C, D. It's a very tight pattern right there. It's just one way to look at it. You could also look at this as a head and shoulders, which is also a bearish pattern. So we have a shoulder, we have the head, a shoulder, shoulder, head, and then a shoulder. And a head and shoulders pattern will have a drop basically the same distance from the consolidation to the head. So that puts us roughly, I think, here filling the gap. So we could have more downside. I probably wouldn't go long for a while, at least until if we find support here at these levels. Neo doesn't look bad, doesn't look special either. Zendesk, had this downdraft consolidating. It could be building costs to head all the way down here. So I'm not going to trade that. Paysign, more of the same. Roku, had a nice run up after earnings. It's coming off on decreasing volume. To me, that says Roku is still bullish. So ideally let that come down a bit more, or consolidate flat before getting in. And the safest entry, once it has consolidated, the safest entry is at the new highs. Rapid7, more of the same on slightly higher volume. I don't like that. Now Rapid7 was really bullish during this area. We had this really good high volume day when we did break out, and it continued, but it seems like after that, it seems like a lot of people sold in, so it has been acting weaker. I can start to see an ABC structure forming here. We have the down there, and then come back up here, and then we could actually hit back to the downside, and we would probably retest this area right here. So that could be a price target to the downside. You could say this is a little head and shoulder pattern now starting to form. I don't know. I like Rapid7, but I only like it above the 57 area. So we'll stay there. Zillow, another bad day. It's continuing to just drop. The floor is falling out. Now volume has not been all that high for this, but no one is stepping in to buy it. So it's probably going to find itself finding support down here at this prior swing point. CyberArk, much of the same, kind of looks like a downward ABC pattern. Twilio, I'm starting to see that again. These are the key levels. If we break these lows from last week, we have much more downside. That's why, it's important to be cautious now. It's important to watch, but watch these levels. And, every chart is setting up exactly the same. Some of those, did not retrace as far up as QQQs, but, we break this area. We break this B point to the downside, we could go all the way back down here. So, caution, 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 caution. I can't say that enough times. Zoom actually looks pretty good. I like it above this level, the 91 level. Boeing finally broke down. I kept trying to make money shorting Boeing. If I would have just stuck in it in the long term, I could have made some money. And I made a little bit here and there. But yeah, I'm not bullish on it. It also wants to retest these prior levels, and I'll just go ahead and draw a line. Slack, well, found a little bit of support. I'll give you that. Disney, nasty looking candle there. Volume's not terrible. Workday, I see that ABCD pattern to the downside, potentially setting up, or it could just, like all of these, they could just consolidate in this range for a while. So, that's a possibility. Now, if we do take out the top of these ranges, it could be game on again, but I think the likelihood would be to the downside, especially if we do break below. If we not just test below, but if we break below and close below on heavier volume, that would mean new downside. Fiverr, continuing to act awful. Toughen, acting awful. Garden Health, actually looks like it held up pretty well. Seek Technologies, also generally holding up pretty well. That has earnings coming up soonish. Probably wouldn't touch that. Enough companies are past earnings. And then last but not least, Bitcoin. Let's just look at that. Yeah, it's probably going to retest this breakout area here. It is coming down on accelerated volume. A little bit of selling started. It increased. So we'll see what happens. If it comes into the swing point on lighter volume, then that may be it. It may find support there and continue up, and we could just consider this whole range consolidation for a much broader move up. But if we break below this, we do have more downside. Yep. Okay. Yeah, so that's it. I think right now, trade cautiously. If you do find some good deals, which there will be days like this, even on this day, on June 3rd, or just kind of going back a couple weeks ago on August 5th, that was a horrible day. Everything was down, but the people that bought did find a nice move up. So I'm definitely not a buy the dip type investor, but if you do buy the dip, I would recommend to buy smaller positions, because you can wipe out your portfolio fast, especially if you think we're gonna find support here and bounce again, but yet we continue to break through. That is a lot of downside. On the Qs, that's 5%. On some of these other stocks, it'll be much more. It'll be up to 20% probably. So it's important to be cautious and just watch it and learn every day. The only way to get better at charts is to look at them every day, look at the volume every day, look at the price action, where it opens, where it closes, the price range, and then make small predictions on what's going to happen the next day. And over time, you really do start to get a read for the market, and you can understand where it's going, or at least you're probably not going to be able to predict it. I can't predict it, and no one can really predict it. But you will get to a point where you're no longer surprised when you see things happening. And if it hits this key level right here, I'm not going to be surprised. It's just a very likely thing to happen. Now it may just blow right past it. That's a possibility. But you do want to get to a point where you're not surprised. And then tomorrow, we may open up, we may open back in this range, and then it's game on again. We may want to test up here again, and if we test it and we fail, we're definitely going to be back here. And if that fails, we're definitely going to be back here again. So this consolidation could be all over the place. So just be ready for that. And but you can't be scared forever, because you do have to take trades. Otherwise you're never gonna get ahead at all. But when you do take trades, just make sure you do know your risk. Um, clearly where you're going to buy before you buy it. You don't buy based on emotion. You buy based on a plan. And then once you're in the position, you watch the broader market, you watch your stock, and then you have a plan to exit. When you're going to get out, and that's either the stock hits your price target, or your stop is hit, or you have at least a range or a certain condition on when you're stopped out. For example, if we close below this area, I'm definitely going to be out. If we test it, I may or may not. It just really depends on how the individual names are acting. So that's how I approach it. It's not a science, it's an art, unfortunately, and there's nothing like having experience. And the only way you can get that is just keep at it day after day. So thanks everyone for sticking around. If you love these videos, if you like these videos, give me a like, and let's keep building on my channel. And hopefully I'll get some more viewers and subscribers and whatnot, and that'll really motivate me to do this in the long term. I have committed to do it all through the month of August, and just want to see how that goes. And if the momentum is there, I do plan to keep doing it. So keep giving me the likes, keep spreading the word, and I appreciate you helping me out. All right, thank you.